Let's get more on Snap with Jefferies tech sector specialist, Jared Weisfeld. Jared, great to see you. What's your take on this move in Snap?
So I agree with what everyone's been saying. I think everything needs to be put in perspective in terms of expectations and trying to frame IDFA, which is the Apple privacy change that clearly impacted the business more than expected in the quarter. For the last 6 quarters, Snap has been beating revenue by about 10%. And here we walked into not only something that's not in line, but obviously a straight out miss versus the street. They grew revenue by about 50%, 57% year on year, which is obviously a staggering number. But buy side and investors were looking for something closer to 70% year on year growth. So clearly an expectations miss there, driven by the Apple privacy changes. Underneath the surface, you have the engagement trends, which are certainly positive, right? When you look at daily active users, DAUs, those nicely beat for the quarter at 306 million, 4 million ahead of the street. Their guidance that they gave on the conference call coming in ahead of the street at the forward quarter. So it's not a user problem, but it goes back to the fact that they're having a significant problem trying to go ahead and be as effective with their ads in the context of an IDFA world. And that's really taking its toll on the growth rate. So, this is not idiosyncratic to Snapchat. Anyone within the ad tech ecosystem is clearly going to be impacted here. But, when you look at Snap trading at, north of 20 times revenue, which is an 8 to 9 point premium where it's been trading versus the last 3 years, clearly a big reset ahead for sure.
Jared, I got a quick question for you. So based upon what you're talking about, it sounds like you're viewing this the same way we are, but I just want to hear confirmation on that. How about Facebook? What are you looking forward to come Monday in terms of Facebook after what we've heard just now this evening?
Yeah, no, I think all the points that have been made have been spot on. And I think from a Facebook perspective, when you look at the relative valuations, Facebook is trading at 10 times next year EBITDA. Not revenue, EBITDA, right? It's an incredibly profitable company. And if you look at where expectations are into 2022, the street already has revenue estimates getting cut in half. You're going from 40% year on year growth in calendar 2021 down to 20 into next year. So it's similar to what Guy was saying in terms of it's almost a free look at the Facebook print with an improved setup in the context of revenue estimates that are more than reasonable in a stock that's trading probably after tonight low single or high single digits as a multiple of 2022 EBITDA.
Hey, Jared, Tim, so let's look at some of the secular trends, though, around ad pricing, around the environment for digital ad, which has been such a strong story. Facebook's ad price growth, over 40%. Part of the reason why the stock broke out. What do you take from Snap's headlines on global supply chain yet again, and what this means, though, for medium-term pricing? It's one thing, we get through this period, but isn't the tailwind still very much intact?
I do think the tailwinds are intact. I mean, we're going through something that is potentially transitory in terms of just an IDFA reset and what that means from a pricing standpoint. But you think about the walled gardens, you think about the platforms that are being created at Facebook and Apple and Google. Very similar to what happened to GDPR or the privacy standards from 3-4 years ago. The larger you are, the better position you're going to be in, right? Scale begets scale. So I think it puts them in an improved position. The one wild card that you have to think about from a cyclical standpoint is exactly what you talked about, Tim, in terms of Snap highlighting global supply chains are an absolute mess, right? So does that impact their advertisers? You're lapping unemployment benefits that were enhanced. So is the consumer potentially more impacted than not? So you do have potentially some headwinds within the overall digital advertising spend environment to think about. And the implications are obviously significant when you think about what to own within tech. Do we just see a rotation more into software because you've got a big chunk of internet that's potentially offline to many investors?
Jared, can we talk a little bit more about the reset because of these new privacy rules? I mean, how should investors look at it? I like the idea of thinking about it as a rule change that everybody has to contend with, and so it affects all of these players. But once we get to the so-called other side of this, what does that world look like in terms of ad rates? Because it's less targeted and the information is not as good, do ad rates come down? I mean, how should investors think about that?
So I think that's exactly right. So we're going through this reset. Ad rates are coming down. You have to believe that the likes of Snap, the likes of Facebook, those large established players that have those large R&D budgets It's amazing that Facebook is still trading at 10 times EBITDA in the context of, they're going to spend $90 to $95 billion next year from a cost standpoint in terms of all of the OPEX plus cost of goods. I mean, they're pouring so many billions of dollars into this. So clearly they're going to do what they can in terms of just to increase efficacy of these ads. So longer term, I think you have to believe that they're working on a solution from that standpoint. But, there are other alternatives to think about, right? Do you have advertisers that shift dollars away from Facebook, away from Snap, to the likes of, whether it's a Unity or an AppLovin or an IronSource? Do those names potentially benefit from an advertiser shift perspective because there's just such a difficult time from a targeting standpoint? But, this does level the playing field across the board. Everyone is facing these headwinds, and it's not just a Snapchat problem. So
it can't necessarily be assumed that things go back to normal after this reset. That's what it sounds like. That there's a possibility that there's a shift.
Absolutely, unless Apple backs down, and that's not something I'm expecting. Tim Cook has been so adamant that privacy is something that he takes so seriously from a corporate standpoint. If that's going to be their stance, then that's a headwind for the entire group for sure.
Jared, always great to get your perspective. Thank you.
Thank you, Melissa.
Jared Weisfeld of Jefferies. Karen, how do you think about this reset, as Jared put it?
Well, the one thing he talked about, which I think others have as well, is the ability of Facebook and a Google to navigate this maybe better than Snap, better than some others. That'll be really interesting to see. However, I mean, I'm optimistic that they'll be able to do it. I don't know if, even if they are able to do it, it still hangs over these stocks and puts somewhat of a ceiling on them. I don't know. It's not making me a seller at all of Facebook or Alphabet. I saw it down maybe 3% or so, which probably isn't down enough going into earnings, but I'm not a seller. I think they'll navigate it better than most.
Something that we haven't talked about yet is the impact on the tech sector. I mean, we're talking about some of the biggest names getting whacked in the after-hour session, as Guy would like to say. And the impact tomorrow has got to be a negative one on the broader markets, Guy.
It's interesting. I mean, it's when you can see stocks of this magnitude. Obviously, we're talking about Facebook, the market cap there, Google. When you see 2%, 3%, 4% moves in names of that magnitude, it makes you wonder, if it can happen to individual names like that, what could happen to the broader market? We obviously haven't seen a single-day move of really any significance for quite some time. It just I think it sort of reminds us that this could happen. It's going to be fascinating to see how the broader market trades tomorrow, right? I mean, we've seen news, not necessarily of this magnitude over the last year and a half, that's been sort of brushed off by the broader market over a day or two. I mean, tomorrow's going to be interesting. Again, I think personally, this is, again, just my opinion, it seems like pretty Snap specific in terms of the move. They went public, I think, in September 2016. I remember the first conference call was a disaster, but they were great ever since. This is really their first big misstep since. But I want to give it Snap specific unless Facebook proves me wrong on Monday, which I don't think they will do.
Right. I mean, the runway for this market move is now until Facebook reports effectively, Tim. But we're also talking about this part of the tech sector that it's getting whacked in the context of rising rates, with the 10-year at 1.7% right now. So that doesn't help either. I mean, you're really taking a hard look at not just the sector itself, but the context in which the sector is trading.
But Google and Facebook being value plays, quote unquote, in the middle of this sector, I think should make them more immune. No question. Yes, we talked about mega cap tech stocks being very defensive in a low rate environment and lower growth environment. If yields are moving higher for a couple different reasons, that could also be ultimately good for the economy. That's not necessarily good for mega cap tech because of the allocation. I think the most important thing is where we've come from. And triple Qs, NASDAQ 100. So Google and Facebook make about 8% of that. And we know that the top end is really Apple, Amazon, and Microsoft. But that up 4.5% over the last 5 days. A VIX sub 16. I mean, these are the reasons why I think tactically traders should be paying attention going into that big week of mega cap tech earnings. They've had a big run. This seasonal pressure is something that really almost seems like a distant memory. And I think that's the most important issue right now.
Seeing the moves that we are seeing in the after hours, Pete, what is the thing that you buy tomorrow or maybe tonight in the after hours?
Well, most intriguing to me after just what we were all just talking about is Facebook. I had already reached in there once, and it had a nice run up towards 344. Then it pulled back, and now here it is once again. in the 320s. I think that creates another opportunity that I'll probably be looking at. I realize that obviously there are some dangers out into the future, but here's the amazing thing. With this big pullback that we've seen out of Facebook, right? I mean, pretty significant, and a little bit of a recovery, a little bit off of the lows. We're up 1,000 points over the last couple weeks in the NASDAQ itself. That's pretty impressive. I mean, no matter how you slice it. So there's a lot going on, Mel, and even with the rates where they are, as you mentioned, and yet you're still seeing the NASDAQ stocks, which are the ones that are supposed to be under a little bit of pressure when we see the 10-year starting to move to the upside. It just shows you how powerful this move really is. And it is Microsoft. It's all the names that Tim was just talking about, these big mega cap names that I think are still names that we all should own, because not only do they look great on a valuation basis, they're still growing. They're growth stocks as well. So I think that combination tells me that I still think there's room to the upside for a lot of these NASDAQ names.